Most contract workers making six figures are actually taking home less than a W-2 employee earning $80K, and their accountant isn't telling them why. I know that sounds backwards. It should sound backwards. But in the next 10 minutes, I'm going to walk you through the actual math that tax strategists use when advising high-income earners, and why the contract work trap is so profitable for everyone except the person signing the contract. Pattern interrupt. Let's start with a real scenario. Two professionals, both earning nominally $150K annually. One's on a W-2, one's a $1,099 contractor. The contractor thinks they won. They negotiated a $150K contract. The W-2 employee is stuck at $150K salary. Seems obvious, right? Here's what the contractor doesn't see yet. That W-2 employee's employer is paying approximately 65% in payroll taxes on top of the $150K salary. That's $11,475 in costs the company absorbs. The W-2 employee never sees this number, but it's real compensation. The contractor, they're paying both sides of that payroll tax themselves. So right now they owe $22,950 in self-employment taxes before they even file their return. The W-2 employee's tax liability is roughly $37,000. The contractor's is already climbing to $49,000 plus. Pattern interrupt, but this is where it gets interesting. Let's talk benefits. The W-2 employee has health insurance average value $12,000, $18,000 annually, depending on plan tier 401K matching, let's say 4-6%, so $6,000. Paid time off 15-20 days equals roughly $5,700 in paid absence. Disability insurance, company paid life insurance, company paid commuter benefits, wellness programs, potentially an FSA/HSA match, total tangible benefits, roughly $30,000, $35,000 in actual value. The contractor has the option to buy health insurance on the individual market, roughly $400-800/month, so $6,000, $9,600 annually. The responsibility to save for their own retirement, and if they're doing it right with a solo 401K. They're losing money management time, no paid time off. Every hour not working is lost income, no disability insurance unless they buy it themselves, $200-400/month, no life insurance unless they purchase it total cost, $12,000, $15,000 minimum, and they're less protected. Pattern interrupt. So we're 15 seconds into the financial reality, and the contractor is already down $22,950 in self-employment taxes, vs. The W-2's $10,000 shared $15,000, $20,000 in uncompensated benefits, that's roughly $38,000, $42,000 in annual cost they absorb by taking that higher contract rate. But wait, there's more. The contractor has business expenses, office space, software subscriptions, equipment, internet, phone, professional development, accounting fees. The W-2 employee gets all of this from their employer. A realistic contractor's annual business expenses, $5,000, $12,000. Add that to the gap. Pattern interrupt. Now let's look at income volatility and what I call unpaid work hours. The W-2 employee works their 40-50 hours. They're paid for it. Done. The contractor doesn't just deliver work. They spend 5-10 hours monthly on invoicing, follow-ups, payment processing, spend 3-5 hours on contract negotiation and renewal conversations, spend 4-8 hours monthly on tax documentation and bookkeeping, experience gap periods between contracts, average 2-4 weeks per year of zero income. That's roughly 80-150 hours annually of unpaid labor. If the contractor's rate is $75/hour, which $150K annual assumes, roughly, that's $6,000, $11,000 in unpaid work. Pattern interrupt. Let me show you the actual take-home comparison. W-2 employee at $150K gross, $150,000 federal income tax, $26,000 FICA taxes, $11,475 state tax varies, let's say 5%, $7,500 benefits contributions, $0 employer covers take home, $105,000 contractor at $150K contract gross, $150,000 self-employment taxes, $22,950 federal income tax, $24,000 state tax 5%, $7,500 health insurance out of pocket, $8,000 business expenses, $8,000 accounting/tax prep, $2,500 estimated tax penalties if miscalculated, $1,000, $2,000 take home, $74,000, $75,000. The contractor is taking home $30,000 less annually on the same nominal income. To match the W-2 employee's $105,000 take home, the contractor would need to charge approximately $215,000, $230,000 annually. Pattern interrupt. Now, here's the part your accountant won't tell you because they profit from your confusion. There's a scenario where contracting makes financial sense. First, if you're doing it strategically with legitimate business deductions. If you have a home office, equipment, software, travel, continuing education, you can legitimately write these off. Your taxable income drops significantly. A contractor with $40,000 in legitimate deductions on a $150,000 contract is only taxed on $110,000 instead. That saves roughly $10,000, $12,000. Second, if you have multiple income streams. Contract work plus passive income, digital products, speaking fees. This is where the tax code actually favors you. You get to deduct business expenses across all revenue and the tax advantages compound. Third, if you're operating at a truly higher rate. Not $150K contract, but $200K, $250K plus annually, where the math shifts because your marginal tax benefit from business structure becomes meaningful. Fourth, if you have a partner with W-2 income and you structure your household taxes strategically. This requires actual tax strategy, not just filing your 1040. Pattern interrupt. Here's what you actually need to do if you're considering contract work. Step 1. Calculate your true hourly rate. Take your contract value, subtract all costs we discussed, divide by actual billable hours plus non-billable hours. If that number doesn't feel materially higher than the W-2 equivalent, you're taking a pay cut. Step 2. Run the numbers with a tax strategist, not just a CPA. A CPA files your taxes. A tax strategist structures your income before taxes are owed. It's a completely different role. Step 3. Build a buffer. Contractors need 6 months of expenses in reserve, not 3. Your gap periods will hit you harder than you expect. Step 4. Cost out the health insurance properly. Don't assume a cheap plan. You're self-employed, you need better coverage. That's $10,000, $15,000 annually, not $6,000. Pattern interrupt. The uncomfortable truth is this. Contract work is often sold as the path to higher income when it's actually the path to higher revenue but lower income. Companies love contractors because they eliminate the benefits liability. Contractors often love the idea because it sounds like more money. It's not. If you're already 6 figures and wondering why your bank account doesn't reflect it, this is probably why. You're carrying costs that employers traditionally absorb. The move isn't to quit and go contract. The move is to know what you're actually worth, structure it correctly, and negotiate from that position. Whether that's with an employer for a higher W-2 salary or with clients for a contract rate that actually covers your true costs. If this framework was useful, subscribe.